not only achieve the fiscal deficit target, but I'll achieve it without those significant cuts which my predecessors used to make.
That's the assurance being given by a finance minister who also says that India is shining bright amongst all the global turmoil. That's a CNBC TV 18 exclusive.
Call it the Draghi rebound. Asian markets rally with the Japanese Nikkei surging 6%, and Europe and Wall Street also get a leg up after the ECB president hints at further stimulus. Oil gets back above the $30 a barrel mark on higher winter demand.
Bulls finally catch a break on the Lal Street. Strong global cues lift the Sensex nearly 500 points. The Nifty is back above 7,400. But Mark Farber says the Sensex can hit 20,000 levels. However, he also insists that India is still worth buying.
Riding on a cold wave in firmer markets, crude prices spiked 6% and reached the $31 mark. This is in fact the biggest weekly rally in 3 months.
ITC huffs and puffs in the third quarter. Profit and sales below estimates. Cigarette business sees muted growth. Agri and hotel businesses also take a hit.
SpiceJet's remarkable turnaround continues. Airline clocks profits for the 4th straight quarter. Beat street estimates among almost practically in all the parameters.
So we are looking at Lafarge also, but there are many others.
But the entire Lafarge India business?
Yeah, entire Lafarge India.
JSW is looking to acquire the entire India business of Lafarge, says Arun Jaitley. That's the big exclusive from the World Economic Forum at Davos.
How we can make sure that some hand-holding support is given to them so that they can come out of this crisis.
The steel sector needs further hand-holding, says the government, but still no decision on minimum import price. Arun Jaitley calls for more safeguard measures before the union budget.
Vijay Mallya mounts a legal challenge against willful defaulter tag, moves Delhi High Court claiming violation of principles of natural justice. SBI disagrees.
I have it from some very good authority in the world of refining, I won't name him, that 2018 is achievable.
Why 2018? Is there fuel available?
SIAM President Vinod Dasari counters Harish Salve's claim that BS6 norms can be ushered in by 2018, warns that meeting the already proposed deadline of 2020 will be tough enough.
From IB, NIA conducted raids across the country.
Maharashtra ATS, in a joint operation with the NIA today, booked 40-year-old Mudabbir Sheikh, a resident of Mumra Thane, under various sections of the UAPA.
Special cell today conducted raids not just in the capital and in the NCR region, but also in neighbouring Uttar Pradesh's Muzaffarnagar and across Uttarakhand.
In Hyderabad also, 4 people have been picked up for their alleged links with ISIS. The police is questioning them and trying to find out the motive.
India's top cities on high alert as an ISIS threat looms large. Multiple arrests made across the country. Good evening and thanks very much for joining us on India Business Hour. I'm Ronojoy Banerjee, and joining me in Mumbai is Surabhi Upadhyay.
Hi Ron, let's straight away get to the market action of the day, and what a rally it's been. Global markets have finally caught a breather courtesy Mario Draghi. The ECB chief yesterday suggested that there may be further stimulus measures at the European Central Bank's next meeting in March. Across the Atlantic, Wall Street has opened out and is now building on some very handsome gains. The Dow, the S&P 500, the Nasdaq, all those indices firmly between 1% to 2.5%. And it's an even better picture in Europe. All of those benchmark indices have been trading with gains of 2, 3, and in some cases 3.5%. You can see the French CAC there really roaring away. In Asia, the Japanese Nikkei soared close to 6% today. The Shanghai Composite in China rallied over 1%. The Hang Seng in Hong Kong ended close to 3% higher. The South Korean Kospi also rallied over 2%. Now, it's not just equities. A cold wave in the US and Europe has spruced up demand for oil, giving prices a huge leg up. Brent crude and WTI NYMEX have been trading around that $31 a barrel mark. And it's a monster rally that's building up. Look at that, 8% up on Brent and NYMEX already at 31.5. Well, buoyed by global positivity and the rebounding crude prices, the Indian market also caught a breather today. The Sensex surged nearly 500 points. It shot past that 24,000 mark. The Nifty rallied nearly 150 points to reconquer the 7,400 level. Ron?
Yeah, well, meanwhile, inflating asset prices through the loose monetary policy is not going to work. And that's the word from Dr. Doom Mark Farber, who predicts a 30 to 40% decline in the US market from its all-time high. The market guru is optimistic on India, but adds that the Sensex could go down to about the 20,000 mark in the global turmoil. Surbhi Upadhyay gets you more on that.
It is also possible.
He is called the perennial bear by some, Dr. Doom by others. But that doesn't change his view. Author of the Gloom, Boom and Doom report, Mark Farber, says the US market is weak and can fall another 30-odd% from current levels.
Beneath the surface, there was already a bear market in the US for a long time, for a year or more. But the FANG stocks and maybe another 20 shares, such as Facebook, Amazon, Netflix, Google, and maybe, as I said, another 20 shares, they were driving and keeping the index up. In the US last Friday, we also had a huge rally from the lows. The market still closed down, and it was unusual. This happens very seldom. We had over 1,000 12-month new lows in the US. This is very seldom that this happens, and it's indicative that precisely most stocks have been weak for a long time.
Farber isn't convinced about today's global rebound.
The oversold position can lead to a rally, but most likely, and I'm saying most likely, not to a new high. I think the markets will still go lower. If you print money, basically something will go up. And in the case of the last few years, what has gone up meaningfully are stocks.
Farber is one of the biggest bears on China and warns of a massive debt bubble building up in the world's second largest economy.
Chinese economy is much weaker than the government is telling you. The economy at the present time is growing at maximum 2 to 4%, and China, like India, is a huge empire, and some sectors of the economy are expanding and others are contracting. But in general, we have a colossal credit bubble in China. Credit as a percent of the economy has expanded by over 50% in the last 6 years.
So that's a thumbs down to the world's biggest and second biggest economies. But Dr. Doom is actually positive on India. He, however, warns that the market in the country could fall further due to the global volatility.
India may still go down to around 20,000. That's possible. That's another 20%. In a volatile world, 20% is not a big deal. And I think that eventually the market will go higher in India. But it will obviously depend on monetary policies. I prefer India to have a relatively tight monetary policies as they are practiced under Mr. Rajan, who I think is the best central banker in the world.
Farber also says India's credit metrics are much better than China, but warns that loose monetary policy can lead to more asset bubbles and further volatility. In Mumbai, Surbhi Upadhyay.
Well, that was my conversation with Dr. Doom earlier. But let's move on to the other big exclusive. I will meet the fiscal deficit target without any spending cuts. That's the big assurance coming in from Finance Minister ahead of the budget. Speaking to Menaka Doshi at Davos, Jaitley also said that he will meet his divestment target and also added that the poor have nothing to worry from the government subsidy policy.
The last government achieved fiscal deficit targets by cutting huge expenditure.
Yes.
This year, I will not only achieve the fiscal deficit target, but I'll achieve it without those significant cuts which my predecessors used to make.
Well, would you attribute much of that to the fact that crude oil prices came down, giving you some cushion?
Obviously.
Yes.
No, but at the same time, I lost 10% of the revenue because the Finance Commission said it must go to the states.
Fair enough.
And this year, I am going to lose 1,02,000 crores worth of fiscal space because that's the impact of the pay commission on the central revenues, the OROP impact being separate.
Yes. So in fact, I think is the question that most global investors are asking. How will you balance these two issues? The fact that you need to put maybe more public investment to work to kickstart or help maintain growth in the economy, and on the other hand, tax collections have not been maybe what you expected. They've been 66% of target so far from the last data.
Mid-year you should not say.
Disinvestment also, sir, is way behind your targets.
Let me set the record straight. As far as tax collections are concerned, on indirect taxation, I am way ahead of the target. On direct tax collection, I am slightly behind, but I am narrowing down on the target. So overall on tax collections this year, I am reasonably comfortable. So the impact of global slowdown or of the corporate balance sheets is not being significantly reflected in my tax collections. I am not even cutting expenditure. The disinvestment target has not been achieved, and I must honestly tell you that one of the reasons why in some of the sectors I slowed down on disinvestment consciously, because when the markets are choppy, the markets are low, the commodity and the metal stocks are low, that's not the right time to sell. I certainly won't sell when the prices are low. Let the prices recover. I will sell those. And let us be very clear. At the end of the day, what does disinvestment today mean? It is a resource belonging to the government or the people of India. Today it is lying by way of shares in a public sector company. Instead of holding that resource in terms of shares in a public sector company, why not have a modernized railway station?
Or any other...
Why not have a highway connected two major areas? Why not have a freight corridor on that money? Therefore, it is readjustment of a resource belonging to the people of India. And the critics of disinvestment, or the conventional critics of disinvestment, if they still exist, must realize that as a part of any responsible economic planning, a government must readjust where its resources are. Do I need shares in a public sector company where in any case I am holding majority shares? So whether I hold 80% or I hold 70%, that's the question. Or I use that 10% to create a national highway.
Yeah, but sir, if I may ask you, you said that, disinvestment targets have not been met because you thought that the valuations were not correct. There were though windows of opportunity, but that aside, there are holdings that the government has, for instance, in Suti, which is the ITC holding, the Axis Bank, which you've paired a little bit in the last year.
Can I now end the debate on disinvestment?
Why is the reluctance to sell the ITC or L&T stakes, sir?
The financial year is not ended. There is still some time for the financial year. Wait for some time and you will hear of the government's decision next.
Are you giving us a sense that you might in fact finally, the government, whether this one or the previous, give up the reluctance to part with the stakes that they have?
I have not said so at all. There are some decisions which are in the offing, and therefore the present figures that you have of disinvestment may not be the last figures that you have as of 31st.
Fair enough. But what is the reluctance on the ITC and L&T stake?
There is no reluctance. There is government resource lying in several companies. It's a question of prioritization.
But they're not even... Okay, I won't press the point, but you know the argument on that front. You have made a mention in the recent past that you would like to recapitalize banks further. Again, I ask the question, sir, how will you find the money to do that, given the many demands that you have?
The money will come from two sources. A, it will come from the budget. And therefore, I've announced a program already.
Yes,
earlier this year.
Which is publicized, yes.
I may add to that investment.
Yes.
So, that's not the final investment. I may increase upon that. Additionally, as the strength of the banks picks up, that is, they are able to make recoveries of some of their NPAs, etc., and their balance sheets start improving, the banks have been told to comply with Basel III norms, as also issue some additional shares and raise a significant amount through the issuance of share capital, bringing the government holding down. I've said the bottom line for government holding is 52%. And therefore, that being the bottom line, the banks are entitled to raise money from there, which will also be a part of the recapitalization, in addition to what will come from the budget.